Welcome back, friends. In this video, we're going to answer the question, what is business analysis? Business analysis is a growing field that is becoming more and more important. And the primary reason for this is that there is so much data available today. In fact, there is so much data that we have trouble understanding it all. Business analysis is a set of tools and techniques to evaluate data and improve business systems. This is actually a skill that you can develop in your organization that can create tremendous value. I want to expand on this definition so you can understand the context of how this fits into accounting. So you can break accounting down into three main areas: process, reports, and analysis. Process deals with the basic accounting tasks. For example, purchasing is a process. When you purchase something, there is a process to create a purchase order and send payment. Reports then take the data from your accounting processes and summarize that data. So your financial statements is an example of a report. It's a report of all the accounting processes that occur during a period. Analysis is used to interpret and communicate information from reports. So analysis takes your financial statement and determines what it means, and then uses that information for strategic decisions. So there's a couple of useful things to understand here. Each one of these items builds on the previous item. So you can't do analysis without having good reports. And you can't have good reports without having good processes. So when you're looking at your business and you're trying to decide what skills to develop, some businesses need to focus on getting good processes in place. Once you have those processes really solid, then you can focus on generating reports. And once you have good, consistent reporting, then you can focus on developing analysis. The message I want to share with you here is that if you are in accounting, this is the one skill you can develop that will really help your career, because business analysis is so valuable to an organization. Let me explain what's happening on a very practical level. So if someone is running an organization, they spend a lot of their time solving problems. And if you have an organization that does a lot of business analysis, you can drastically reduce the number of problems the boss has to solve. So for instance, imagine your employees function primarily at that process level. So they come in, they do their jobs, and they follow a set process. Well, if that's their focus, whenever something pops up that doesn't exactly fit that process, that thing becomes a problem, and the employee shoots that problem up to the boss. Problems eat up a lot of time, and so ideally, a boss would be spending less of their time solving problems and more of their time doing higher level activities like setting the direction for the business. But in order for your employees to solve problems, that requires the skill of analysis. So imagine this other scenario. Imagine if all of your employees not only performed the process, but they also generated reports and then did analysis on the reports. So suddenly, instead of bringing the boss problems, they're bringing the boss solutions. And all the boss has to do is sign off on their approval. That is the value that I'm talking about, is created through business analysis. And it's tremendous for business organizations. Let me end with a very simple example. So imagine in your organization, you were to run a trial balance, and you noticed on this trial balance that your revenues are less than expected. So right here, this is a simple analysis you've performed. You have a report, your trial balance, and you looked at the numbers on that report and you noticed a difference between your actuals in your revenue and your forecasted revenue. And that discrepancy tells you that there's something to look into. Now, hopefully you have even more reports. Hopefully you have a more detailed revenue report where you can drill into those revenue numbers and find out what is causing this discrepancy. Hopefully you have collections reports and aged receivables reports that you can look at and see, are there bills that haven't been paid? You know, this could be a simple example of a check got lost in the mail for a large contract you have. Let's say you've gone through the data and you've done some analysis and you've identified that the major driver for this drop in revenue is a single check that didn't come in that you were expecting. Well, then you can take the further step and call up the customer and find out what the issue is. So this is a situation when this does get to your boss's desk that you can walk in and you have the reports, you have the analysis, you understand the issue, and you can provide a set of recommendations. You can provide that solution. If you don't do the analysis, the contrast here is dramatic because you end up walking into your boss's office and saying, hey, I think there's a problem here. Good luck with that. So I hope you're starting to see the tremendous value that business analysis can bring to your organization. Now I want to hear from you. If you think that business analysis is important, go ahead and leave a comment down below. Let me know what you think. And if you found this video helpful, click on that subscribe button. The best way to supercharge a business is through accounting and corporate finance, and I release a new video every week, so come back and check out next week's video.